Good morning, ladies and gentlemen. How we doing? This is another exciting episode of Forge and Fire. I am your co-host, Nate Farmer-Eden, and I'm going to be running the show today. My counterpart is unable to make it for today, but that's just fine. We're going to keep rocking and rolling. But what we've got today is an amazing guest. We got Georgy coming in, and just to tell you a little bit about him, not to dive all the way in, but this gentleman, he is the founder CEO of Equis Capital. They've done over $28 million worth of real estate within his portfolio. I'm sure it's more than that when it comes to transactions. He walked away from well over a six-figure tech job that he was rocking with. I'm not going to tell you all about it. He's going to tell you about it. But without further ado, Georgy, come on stage, brother. How we doing, man?
I'm doing well. Thank you so much, Nate. Happy to be here.
Dude, no, pleasure is all ours, man. So please tell us a little bit about yourself, man. What got you here? What brought you here?
Oh man, like you said, I had a career in tech, and now I'm more in the entrepreneurship side and on the real estate side. But I'm originally from the Dominican Republic, and I grew up in a very humble household, and I started to code when I was about 10 or 9 years old. So that's a little different than most people. But I was just a very curious kid in the Dominican Republic. And very honestly, I was very bored. So I just stumbled upon programming and software. Didn't know what I was doing, but I just went with it. Now, when I was 17, I read two of the most popular books there are that entrepreneurships read those books, and something changed inside of them. One was Robert Kiyosaki's Rich Dad Poor Dad. And the other one was Napoleon Hill's Think and Grow Rich. So retrospecting a little bit from that moment, I remember that Rich Dad Poor Dad taught me that time is worth more than money. And that's the real currency that we should strive for. And how we spend our time does matter. And from Napoleon Hill, from his book, I learned that you can achieve anything that you want to do if you put your heart, mind, and soul to it. So that's a moment where I made a drastic change. I knew how to code, and I had a lot of scholarships in the Dominican Republic, and I decided to leave everything in the Dominican Republic. As soon as I was 18 years old, I told my family that I was going to move to California, that I was going to go as close to Silicon Valley as I could. They weren't able to support me financially, so I had to figure that out. And I think at the time I had about $1,000 to my name. I packed 2 suitcases and I moved to California. Spent 6 months living in my aunt's couch, and started community college. And long story short, I went to the University of California in Berkeley. I studied computer science, and I got into Amazon. I started my own company in the intersection of blockchain and AI, something very, very nascent at the time. And then I got into Meta as a AI engineer. But at the same time I got into Meta, I pulled the book from Robert Kiyosaki back again. It's like, you're here for a little time. You're not here forever. So I started investing in real estate. So that's what I did. I started investing in real estate, and one single family led me to a duplex. A duplex led me to a land for a new construction. Then that led me to multifamily. And now Equis Capital has a portfolio. You mentioned 28 million. Right now we're 35, but we have some heavy hitters that are going to cross us across the 100 million mark pretty soon. But that's where I am right now, just buying real estate and then doing tech. But the tech that I do and the AI that I do, it's related to real estate.
Holy cow, brother. Holy cow. I mean, there's so much that I want to dive into, man. First and foremost, your story is remarkable, man. And thank you so much for sharing. Just the fact that you were young, not even, double digits, and you found an interest in some type of IT with coding, right? And you're just like, you know what? I want to go deeper. And then $1,000 to your name, you're like, you know what? We gonna move. We gonna figure this stuff out. And you did. Literally, definition of Forge and Fire, definition of bootstrapping from the ground, man. And there's a lot of commonalities, a lot of similarities that I eventually get more into. This, but I was born in Haiti. And so I'm adopted. So I came from Haiti. And my very first internship was actually at the age of 12 years old. I built my first computer. So I have a huge background when it comes to like IT. Now, if you ask for a computer program or you're talking C++ or any of these kinds of things, well above my pay grade. Don't ask me to do any of that stuff. But if you want to put it together, I can do that for you. But enough about me. Now, let me dive a little bit deeper into this, man. So talk to me a little bit about some of the journey. A lot of our listeners, they're on the couch right now. They're working the 9 to 5. They're doing the W-2, but they have in the back of their minds this inkling where they would like to be able to do some entrepreneurship, but where the hell is that next paycheck going to come from? What am I doing? How do I get started, man? So talk to me about some of the trials and tribulations from taking stuff from Meta, which is a huge accomplishment in and of itself, but going from where you were to single family to the duplex to literally you sped all the way up to 28 mil plus. Now we're about to break 100 million. There's got to be some stories in there that I would love for you to share, brother.
Yeah, absolutely. So I think for most people, it's worthwhile to dip your toes into the water first. And that's what I did. When I started at Meta and I was getting the paycheck, I was investing in real estate. And there were smaller deals. So it was a way of me understanding, okay, how is this going to work? Can I scale? Can I continue getting these deals that are under market that will continue giving me cash flow or refinances that I can use as income? And, you know, there's a parallel reality where probably that didn't work. Maybe let's say if I started 2 years, 3 years later, when the economy wasn't going on the right direction, probably I would have thought, okay, this doesn't work. Let me try something else. But I think I was in a good position where the economy was going up and it was going better, that I could have that learning there and I wasn't discouraged. So that did help. But at some point, once you have your 9 to 5 giving you the income and you're stacking these cash flowing assets, you realize, okay, rather than replacing my total income, what if I just replace my expenses? So that's what I did. I started replacing expense items. It wasn't really, and obviously the fixed cost that I had, not the variable cost. So that's how I approached it. And at one point, with enough runway, with enough deals in the pipeline that were getting under contract and with enough cash flow covering my fixed expenses, then that's the moment where, you know, I could take the leap. Another idea, because it's also very scary to take the leap, even if you have all these things, it's very scary, especially when you have an income that continues to grow. It is very scary. So first thing for me is that alignment, right? Is it going to make me happier to continue increasing my income under this environment? The answer for me was a maybe, wasn't a resounding yes. And the other one is, what is the worst that can happen? So if I leave and I have to come back, what's the worst that can happen? And it looked like 6 figures again. So that was it was an obvious choice for me.
Oh my gosh, dude. I love it. Okay. I am infamous for this, but anybody that's listening, I need you to pause. I need you to rewind. I need to play this whole thing back from the top because Georgie's dropping so many golden nuggets that I'm hoping that you guys are picking up on. One of which is to me one of the most important, is the fact that he was able to see a few steps ahead and say, you know what? Things might not go well. And if they don't, this is what we can do. What's the worst that's going to happen? Right. But on the flip to that, the worst that can happen is if you don't actually decide you're going to make that next step. To me, the fear of wondering what if I would have not made that actual move, it hurts way more than if I try to do something and I approach it and it doesn't go according to plan. And I'm hoping that you guys are driving that point home. So, Georgie, with that being said, man, going from the single family to the duplexes to now where you guys are, couple of things. One, what is the strategy now? What does it look like? Buy and hold? Are we doing value add or syndication? Fill me in on that play. And then two, talk to me a little bit about the team structure. because what we did was we went from you getting over to the States to jumping in, moving all the way up to Meta, to now you're a solo entrepreneur, solopreneur as we call them, buying single families, a little residential here and there, and then all of a sudden now we're going to big stuff. And one of the things that I pride myself on, and I lost tens of thousands of dollars in the very beginning, was I thought real estate was all about a me, I, not a team, not a we, not a us. So what does the team structure look like, and how did you go about developing that, man?
That's a great question, Nate. So the way that I used to do single family is completely different to the way that I do commercial and the other type of real estate that I do today. I feel like my understanding of real estate has completely changed, but it has also made me a better business person. So I like to dissect businesses, and sometimes I'm doing real estate, sometimes I'm doing tech, sometimes I'm doing more of a private equity type of deal, but I've learned that they all look the same. At the end of the day, a business is trying to get revenue in the door and is trying to make their operations more efficient, which is proportionally, it affects valuation as well. If your operations is more efficient, it means another buyer can take it and extract value from it. And of course, decreasing the cost. So it's always about that. There's always some type of marketing, there's always some type of sales, and some types of operations. So armed with that, you realize you need a team, because you cannot do it all, right? If you want to continue doing it as a hobby or a side job, then it's going to remain small as a hobby, as a side job. So the first leap is thinking of yourself as a professional. Like, this is what you do, and if you put a lot of love in your 9 to 5, well, you better put a lot of love in this empire that you're trying to build. So that's a mindset shift that first goes in. But there's also a lot of, like you said, going from I to we. A great book for that is Who Not How, which probably a lot of the listeners have read it, but I love that book. It's another mindset shift. And nowadays, Nate, I almost nothing that I do, I keep 100%. I don't even want to. Even if I can, I don't want to. When I structure usually a new business, a new company, I'm already allocating percentages for other people. I don't keep 100% of everything, because that's not, again, another mindset shift from that Who Not How, and understanding where my strengths lie. And they're a bit fluid as well, because I think your strength is not only what you're good at, but also what energizes you. And that changes with time, especially if you're all over the place, like a lot of entrepreneurs are. So in terms of team, in terms of the real estate that we do today, we operate in the US, and we operate also in the Caribbean, in the Dominican Republic. And in the US, we've built alliances and partnerships with people whose strength are in the operations side of things. And we also have developed our systems and alliances for the acquisition side of things. So for instance, right now we're sitting on between 5 or 6 acquisitions that are post PSA, purchase and sell agreement. So that's huge, because it means we have deal flow for the next probably 6 months already. So that's part of the acquisition system and alliances that we built. And they're already vetted. We have already underwritten those deals, multiple people, so they're good. Now, in the operations, we also have very vetted operators. Right now, the model is a bit of we're going to partner rather than bring it in-house in the US. In the Dominican Republic, it's a little bit different. We also have the same acquisitions pipeline, but we're building vertical integration. So we're building all the way from the management, so the property management, whether it is long-term or short-term, whether it is residential or industrial, we're building vertically there. And then construction right now, we're building the alliances with the idea of either purchasing and bringing them in-house, so more vertical integration, or, time will tell what happens there. But the goal, it is vertical integration in the Dominican Republic. In the US, we are working towards that, but right now the alliances are with operators who are in part vertically integrated, which achieves a similar goal. So it's a little bit more professional, and we where we focus mostly is on the capital allocation. Right now, that's the thing, that's our strength. With our connections and the trust that we've built with our investors, we can place capital and get very good terms for our investors, and then we can just take those deals from A to B.
Oh, dude, I love it. I love the breakdown. I appreciate the fact that you were kind of diving in a little bit, and then also making it enough simplistic enough for us to be able to follow, and explaining what some of these terms are, especially with the vertical integration. And so I got started back in 2017. I did house hacking, duplexes, worked my way up. We just closed past October a 54 unit syndication style. We got another 12 unit. Now I'm investing out of state as well. So that's always been our bread and butter. And we're continuing to trend upward and continue to move forward, and all that's great. But for us, our buy box is we're trying to be too small for some of the big heavy hitters, but also too big for somebody that wants to just come in and be like, hey, I'm just going to buy it in cash. So that works for us. But what about with you guys in terms of finding partners? And then, of course, when it comes to the acquisition, as you guys say, you guys have that faucet turned on to where inside of the pipeline, you've got, 4, 5, 6 deals already lined up past purchase and sale agreements where you're like, you know what, we don't really need to worry about it. But what happens once that's done? What does that look like? What is your buy box? How are you guys going about it? And then also, how are you splitting your time? Because me, I mentioned investing out of state. That's just a couple states away. You are investing overseas all around and still keeping a handle on things and still driving and moving the needle forward. That is epic, man. Fill us in on that.
Yes. So our buy box has changed a little bit when there are macro market dynamics, especially with supply and demand. Sometimes you have to slow down the acquisition in certain areas. For example, Sunbelt and Florida and Texas. Sometimes we move from development probably to acquiring something that's a little bit more turnkey or value add, and then away as well, depending on how the supply and demand balance is going. So that's more on the general economic side. But the answer is the partnerships that we have. That's how we can achieve that. So right now, I am in the Dominican Republic. And the reason is because we're building that vertical integration. I have to be here. I have to be the one hiring the people, monitoring, implementing the systems. And that's okay, because I have a vision, and I know that it takes hard work to get there. I cannot expect everything to be like passive income all the time. So in the US, I already did that work over the years. So we already built the systems and the partnerships, and it's just roughly the same over and over and over. So that is working very well. And now we're really at a point where the systems are in place, and we really need to get the right talent in the system and continue growing that while we focus on, on the new sector in the Dominican Republic where we're working there. When it comes to buy box, Nate, we love multifamily, but we also like industrial and development. So buying land and taking it from, this is just land to this is something that is helping the community, something that is at its maximum point of value creation. That is our cup of tea right now. That's what we like doing. And the majority of those projects that I said are under contract, majority are development right now.
Oh, man. Dude, again, so many golden nuggets, so many gems dropped. This is amazing. Now, talk to me about, I've got something we're going to do here in a little bit, but before we get there, talk to me about some of the early stages of like your first like 1 to 2, maybe third deals maybe pushing it. But where I want to go with this is, What was it like coming from IT tech, coming from Meta, coming from that kind of a background to, hey, I'm getting into real estate. You guys should come with me. You guys got to know, like, and trust me. Hey, now we're going to also raise a little bit of capital, and I think you should put it with me. So, like, did it just happen overnight? Did people just like, you know what? Hey, Georgie, it's cool, man. I'm going to give you like $6 million. Or what was that like building that coming from two separate industries?
Yeah, no, that's a great question. That transition from the first few deals, the single family, towards getting bigger and also taking capital, it was a fun transition, I'll say. But I started, like you mentioned, it was I'm going to buy this property and it's going to be in my portfolio and it's going to give me cash flow. That's it. That's what I thought. And in the first active investment that I did wasn't actually an investment, Nate. I'm a geek, I love coding. And if I'm going to do real estate, I want to understand all the numbers. I really want to understand all the numbers. And I was one of those technical people that engage in analysis paralysis and wanted to get so much information that they didn't do anything. But, I gathered all the tools to run an investment or to analyze an investment. And I ran that deal, that property that I bought, which it was actually a house for my grandmother. So there's a story behind it. That was the first time that I saw, a few thousand, tens of thousands of dollars stacked virtually on the phone, but stacked, right? Mental picture. And the first thing I thought about is like, my grandmother needs a new house. Because when I used to live with her, it's an okay house, but it's a little old. Nobody has fixed it in a while. So I bought a house in the same hometown, about 3 blocks away, and it was unfinished because the owners ran out of money while they were finishing it. So I put an offer, and it was a creative offer. I just listened to some podcasts and I put some pieces together and I put a creative offer and they accepted. And it was well below market value because I ran some comps, because I listened to some podcasts and I ran some comps. So I knew I was getting on a low enough basis. I knew I was squeezing out my return, not decapitalizing myself too much. And I was getting in a good position, a good entry position. So I got 3 quotes, 3 bids to finish the property because I heard that on a podcast. And I got the one in the middle. Well, I negotiated the middle down to the bottom one and I got that one, right? And then I made the contract with penalties and bonus structures because I listened to that on a podcast. And off we went. And it was all cash. It was an all cash purchase. I financed everything. I didn't want to use debt because I understood at that moment that it was a clock and I didn't have experience. So I needed to do it this way. And when I finished the property and I got the certificate of occupancy and I fly out to see my grandmother and I hand her the keys, she decided that she didn't want to move in. She didn't want the house. I call my mother and I tell her, please call grandmother and convince her because we've worked very hard for this. And she doesn't want to. She didn't want to. So, and I try again. We try for like a month. And well, I put the house, I underwrote it. So I look at what was my ARV, and I validated and I put it out in the market, and somebody offers me almost ARV, but it was all cash. And this was on a Friday. I had to go back on a Monday, and I told him that we don't have a lot of time. And he says, I'm ready. I'm ready right now. You can just come over. So I do it. I go in the car, I drive all the way to where this gentleman is. I do some due diligence, understanding who the person is. Happens to be someone who studied with my mom in school, very respectable entrepreneur in the area. And we finalized the transition. And I realized that I made 20% in 7 months. Again, while I'm driving there, I'm asking my grandmother again, are you sure? Are you sure? She doesn't want to. So I proceeded with the transaction and I made 20%. So that was my first deal. I just stumbled upon an investment that wasn't really an investment, but that I underwrote like it was an investment. And this is similar to how people start house hacking as an accident. They buy their first house and they realize, oh, what if I do this that I heard on a podcast? So I sort of the same for me. And as soon as I got the money, I put it in a condo near the beach, and I put it on Airbnb. So I just go on. So I continue doing these deals. But there's one key thing that I did at Meta with my colleagues. I was telling them the stories. I told them the stories of what was happening, and they just thought it was the coolest thing ever. They wanted to do the same. I was telling them the numbers. And at some point, people asked me, how can I do this with you? At the beginning, I thought, why would I share my profits? But then I realized that at this pace, it probably was going to be one deal a year. And I understood that wasn't going to be that fast. So that's when I shifted my mind again, and I figured out the structure to accept capital and do this a little bit more fluid, where it doesn't have to be, if the bottleneck is my capital, how can I remove the bottleneck? Well, if you structure it where you can accept other people's capital, right? But then it's like, if somebody's giving you capital, there's a reason that they're not doing it themselves. It's either because they don't have the knowledge or they don't have the time. So that became the pitch, okay? Because I had the time and I had the knowledge. What I didn't have is more capital as quick as I wanted it. So that was the slow transition into it.
OMGs. Holy cow. There's so much to unpack here. And this was so freaking good. First and foremost, oh my gosh. Worked 7 months tirelessly, decided, I love the fact that you were listening to so many podcasts and got educated, like, hey, get 3 bids, don't accept the lowest, don't necessarily need to go with the highest, but the fact that you thought outside of the box, took the middle down to the lowest, was like, you know what, we'll go with you guys. Genius. And I also want to make sure that we're honing in for everybody that's listening, just how analytical and out of the box the thinking is with Georgy right now. This is amazing. And it ties all the way back to the very beginning and to the middle of what we were talking on this podcast and to what he just mentioned, to where he looked for a need, figured out where it is, thought about kind of like a triangle, said, hey, I got 2 pieces of the puzzle. This is what I'm lacking over here. But the 2 things that I'm holding are 2 things that other people cannot get their hands on without me. So what I'm going to do is utilize what I have, my gift over here, and say, hey, if you guys do want to join me, that's cool, because now I'm going to bridge the gap. And the other piece to it, one of the situations, and we keep talking about mindset, guys. I'm hoping that you guys are figuring out that this is very key and one of the most essential things that will help you drive forward and move the needle forward. It's one of those things that just you've heard from my stories time and time again, where I've lost tens of thousands because I thought me, I. George had the same situation where he's like, hey, I got a pie right here. And right now I have all of the pie. We call that 100% and I'm full. Why would I give anybody a slice of my pie? And then all of a sudden changed, because when you realize that there's also a huge power in doing things, 1, for velocity, and 2, in abundance, to where you're able to do more things way faster, everybody eats. And that's that abundance mindset that we keep talking about. So, Georgie, I appreciate you. That is crazy that your grandmother did not want to move in, but hey, it also was a life lesson for you, and it worked out, dude. So that's awesome.
Yep.
Man, so at this point, there's so much more I want to dive into, but I know that we're running low on time. So this is what I want to do for you. I've got a set of 6 questions that I want to ask you, and I'm going to ask you back to back to back, and I'm going to do the best I can to not respond. But I want you to give me the first answer that comes to your mind, and you can answer as succinctly as you like to, or make it as long as you want to. But I just want honest, truthful answers shot right from the cuff. Cool with that?
Let's do it.
All right. So my very first question, man, what separates top performing entrepreneurs from the rest of the crowd?
Taking action and not being scared of taking action.
Moving the needle forward, taking action, not sitting on the. I failed already, guys. I'm just reiterating. Like, this is what we've been talking. This should be the gosh dang theme of this. This is amazing. I love it. Okay, number 2. What is a daily habit that's contributed to your success?
Never stop learning. I never stop learning. I'm always learning new things. Even the things I'm not supposed to be learning, I'm learning just so I know.
Oh, I love that. I love it. I love it. Okay. What's a piece of advice that you give yourself if you were to start over again?
Think bigger, earlier, and don't be afraid of bringing other people.
So good. So good. Okay. All right. And we talked a little bit about books. We mentioned it. We talked about Who Not How, Dan Sullivan, Benjamin Hardy, amazing book, one of my top 3 of all time. But what is your favorite business book? Doesn't have to be real estate related.
I liked The Alchemist and The Little Prince. Those have very good teachings about alignment and values. Those are, I think I gift the Little Prince to a lot of younger folks. I mentor a few software engineers and people interested in tech and entrepreneurship back in the Dominican Republic, and that's one of the books that I typically give them.
I love it. I love it. I love it. Okay. What's your favorite part of owning your own business?
The autonomy and the freedom and the autonomy that you have. It can be a double-edged sword, but I think that somebody creative and ambitious can flourish. It will take a lot of chaos, but at the end you come out victorious.
So good. Okay, I lied. There's a few more questions because you are going in so many amazing directions. What is something new that you've implemented in your business that's helped drive success?
AI automations and AI agents. That has been a game-changing implementation that I've done. And the framework of delegating, automating, but also eliminating and simplifying. I find myself going in and saying, this should not be delegated. This shouldn't be a role for anyone. There shouldn't even be an automation. This should just not exist. So first eliminating, then automating with AI automations and agents, and finally delegating to A players.
So, okay, so you take the whole thing. Again, I like the analogy. Maybe it's close to lunch. I don't know. We'll use the pie again. You look at the pie and you're like, you know what? Hey, moving this business forward, let's just focus on the 20 or the 10% that's actually moving. We don't need the rest of it. So you eliminate. And then from there, you're like, you know what? Out of this 20% that's remaining, a lot of this is manual, but it doesn't have to be. So let me automate the rest of it. And then from there, what we can't do to be able to keep your mind sharp, to be able to continue to move forward and continue to be able to set that vision, we'll go ahead and we'll delegate whatever we can from there. Following correctly?
Yes, yes. I do want to put a piece of knowledge there, something after eliminating, before automating, or before delegating. It's very important to try manually yourself to document and systematize. So what I mean is, you try it, you write down every single step, you find out what are the stuff that can be automated or cannot be automated, the stuff inside of the processes that, because everything can be divided by sub-steps, and document that into an SOP, for instance, or even a diagram using Figma, Miro, one of these apps, and just doing the flow chart. And then color coding what can be automated, what can be delegated. If you do that work, I did it this weekend on one of the processes, it's game changing because you have this understanding of your business, this new understanding that you can go ahead and delegate even the automation, for instance.
Oh my gosh. You and I need to talk about this offline, man. I think that is amazing. I love the way that you're able to like simplify it. And on top of simplifying it, with simplicity also comes more of a deeper understanding and more knowledge behind all the intricacies of what your business is. And I want to say, dude, hats off to you, be able to mirror that with your initial strength of IT and being able to be in Meta and all of that. And you're like, you know what? This is not something that's completely new to me, but now what we're going to be able to do is make this better and figure out how we can get this to work for me. Dude, hats off to you, man. This is awesome.
Thank you, Nate.
Yes. Now, this is a bonus question. You flew through that with flying colors, but this is just one of the bonus questions here where I want to say, what are some of the KPIs that you track? And because you mentioned being able to take, one aspect of your career, one aspect of your job, one aspect of entrepreneurship, and let's just look at your business. You're like, you know what, let's dissect it. Very similar to the pie reference we just made. But at what point do you know that you're moving the needle forward? At what point do you know that you are actually going in the direction that you would like to go?
Yeah. So I will say one thing I stopped tracking. I think that's going to be even more useful. And I'll tell you the ones that I'm currently tracking. So I don't track anymore number of acquisitions. Before I wanted to do 3 acquisitions this quarter. But whenever there's a metric that it's not 100% sure that if you do that acquisition, your life will be better, your business will be better, because maybe you can get a low quality acquisition that becomes a headache for everybody in your company. So whenever there's a KPI like that, I rather remove it, because I don't want to have a KPI and then an entire decision tree. Is it this or not? Is it this or not? Oh, this one doesn't count. I don't want to do that. So I don't track that anymore. But what I would track, for instance, is how much capital our investors have entrusted us, because that means a lot more. It means the trust that we've built, right? It also implies the size of the deals that we're doing, which is, for example, the asset under management doesn't say that much, but the capital that we have placed from our investors into the deal, that encapsulates everything, right? Capital distributed back to the investors. That one means a lot, right? And as well as sometimes number of automations that we have running or number of steps. In some parts of the organization where it's very AI heavy, we have the number of tokens that we are sending to the AI and getting back from the AI. This can get a little bit outside of real estate, but that means that's the amount of dependency that we have with the AI, which is a good thing, or utilization, and then how much value is it creating to the organization back again. And of course, revenue is very important, and then your margins are very important. So every month I'm looking for, there's always new software that comes out. I have this rule that if it's $50, just go ahead and spend it and use it and try it out, and you can kill it by the next month. But it can add up, right? So every single month is coming up and saying, okay, do we really need this? So simplifying, do we really need this, right? Are these, sometimes are these departments talking to each other and these employees talking to each other? Is it adding more complexity, or is it simplifying our lives? So let's remove this person who's an A player and put them into the other C. So that, I don't track that as a KPI that much, but it's a recurrent habit that I do.
Oh my gosh, so many, Jeff. I can pause, rewind, play this whole thing back. This is amazing. Holy cow, dude. All right, so 2 last points before we get out of here. I know I've held you way longer than I told you that we were initially going to. But number 1, where can people find you? I want to be able to have this kind of be a catalyst, or at least added to your tool belt to be able to say, hey, this is a platform that I was on, and I can be able to have folks that might want to invest with you, get to know, like, and trust you. So where can people find you? Number 1. And then number 2, any final thoughts, any piece of advice that you want to leave for somebody that's still up there chilling on the couch and is like, you know what, I've got this killer idea, but I just am not yet sold on the fact that I should just take that leap of faith?
Yes. So I will start with the idea, and then I'll mention where to find me. The key idea would be, if you had dreams when you were growing up, and every so often, it doesn't matter if it's every 6 months, every year, every 5 years, and they come back to your head, listen to that very carefully. Write it down. Maybe have a page in one of your notebooks and just write down when and what came out, because there's something out there. Universe, God is telling you that there's something for you, but they're doing their part, and you have to do your part. And your part is to take action. So if you have dreams, if you had any dreams and they keep coming back, listen to them, because you're only getting older and your dreams grow in weight. So don't wait until the very end of your life to say, I wish I had done that thing. What would have life looked like? And don't be scared to fail. If it's not catastrophic, you will end up learning something. So that would be my advice, to just follow your dreams. Listen and follow your dreams. And to find me, Nate, and I love this podcast, by the way, to find me, LinkedIn is a great place. So Georgy Marrero, GeorgyMarrero, or you can see the details on the pod, or also on Instagram. Those are the two places that you can find me. Just go DM me directly, say you listen to this podcast, and I'll respond to you directly, and we can take it from there.
Oh, my brother, this has been amazing. Dude, sometimes you jump on a podcast, you don't know, you hope for the best, and you kind of one of those situations where you shoot for the moon, land upon the star. Dude, you are all that bag of chips. I'm showing my age right now because I'm using like old vernacular that probably no one is like, my son's looking at me crazy, but it's fine. Doesn't matter. Dude, this has been amazing. Your stories behind it, the way that you took us on your journey, from coming from overseas to, showing up in the United States with $1,000 in your pocket. You're like, we're just going to figure this thing out. And then after reading a couple of books and then listening to some podcasts, you're like, we're going to take this leap of faith. We are going to do this for a grandmother because she deserves it. Did it. 9 months or less. Got it done. I was like, hey, here's the key. She's like, I want to do it. You're like, okay, now we got to figure out the next plan. Figured out the next plan, realized that back to the numbers, made 20% on it. And then from there, you're just like, you know what? This is not bad. I'm going to keep going. I'm going to keep growing, and I'm going to tell and document my story. Talk to everybody within Meta and all the other places that you were employed. You're like, hey, this is what I've got going. This is what I'm doing. And then initially people were like, how can I get in on it? You're like, you know what? You can't. This is me. This is mine. I'm not sharing. And then you're like, you know what? Nah, I need to change my mindset. And you did. Shifted. And now you've grown to, hopefully, with all the things in your pipeline, to well over $100 million worth of AUM. And dude, that is no easy feat, man. Salute to you. Salute to Equis Capital. Salute to everybody that you're working with, and all of the amazing support you're building, man. Thank you so much for being here on Forged in Fire, dude. This is awesome. It's an honor, a pleasure, and a privilege.
Thank you so much for having me, Nate, and thank you for listening as well.
Of course, dude. My pleasure, man. So for those that are out there, those that are listening, those that are driving to work or on your daily commute, get home safe. Thank you all so much for tuning in. I hope you guys grab something from this. This is the point of the show, again, where I say stop this, play this, rewind it, take it from the top, write it down. Make sure that this stuff marinates with you. It's all about the mindset. It's all about, especially what Georgie was just talking about, we've got an idea that keeps coming back to you week after week, month after month, and it just all of a sudden hits you kind of like a lightning bolt. And you're just like, hey, document, write it down. So that way you can go back. You can sort of reflect upon what it was and then take action on it. It's all about taking action, moving the needle forward. But with that, guys, you all take care. You all have an amazing time. We'll see you guys in the next episode of Forged in Fire.